The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we found a little bit of green on the screen on Monday. Soybeans led the way, corn up as well. The wheat trade mixed, hogs higher, cattle mixed. A fairly decent day to start off the week. Let's talk about it. Joining us now for market analysis, John Heinberg with Total Farm Marketing. John, good to catch up with you again. And kicking off the week on Monday, not a bad day. Soybeans bouncing off the lows. We got some rumored China business on the books. Wondering if we maybe got just a little bit of short covering pop here. One day doesn't make a trend, but maybe it could be the start of something. I guess overall, not a bad day in the grains on Monday, was it?
No, it was a good day to start things out here for the week. And, you go through and start digging for reasons why we're higher on the day. And there's a couple that come to mind. And I've seen one being as oversold as we are, especially in that soybean market. It was probably being valued as cheap. And like you mentioned, we saw really good export inspections today. We had a nice set of bean sales, China of unknown destinations. But then we're just hearing a little bit more talk that they're in that soybean market more. Again, what's reported and not reported could be a difference. One source I look at said that China was in the market for up to 25 cargoes last week, of which they bought the majority of them from the United States. Now, we'll see that on export sales this week, if that's true or not. Now, that's a little different than 2 weeks ago. We were thinking it was about a 2-to-1 ratio of Brazil to the United States. So maybe we've hit that price window where things are kind of working into our side of it more. Brazil does have a few issues. Bean sales are tight. Profit margins aren't there, so producers are holding beans. That's just bringing the cost up and the premiums up a little bit. Northern parts, that Amazon River Basin is drier. That could be affecting some of that northern shipment, even though about 70% of the beans or so come out of those southern ports. But that could just still deflect a little more business to the Gulf. So maybe those are some of the factors coming in. We'll have to see. I do think one big overlying factor today, big break in the U.S. dollar today, breaking through the bottom side of some trend range. Obviously, we got the Jackson Hole meeting. The Fed's going to probably try to get on top of their policy statements a little more later this week with some of their announcements and their press conference and things of that nature. So maybe that was a little bit of it today too. Is this that break in the dollar? Also, maybe those U.S. goods are going to be a little more available. As you kind of said, we had a pretty good day across the commodity space overall.
Corn market too, getting some of those new crop contracts back into the fours on the board. I was happy to see that on Monday. I think in the case of, when you think about the demand picture, we talked about it, soybeans got a lot of catching up to do. Corn's been okay. And I felt corn has done a pretty decent job holding around that nice round number of $4 here, John.
Yeah, we seem to be a little bit magneted to this area. We did go on Friday, take out that low from last week off the report by just a tick. So we get some bounce back off that today. Getting back into that $4 handle just seems like we kind of ran into a wall there. I would assume there's some producers saying, if I get a 4 in this thing, I'm selling it. So mentality. So that was there. One thing that's really been encouraging has been the export shipments of this old crop corn, 1.16 million metric tons today. That's a nice chunk, especially in a window where we're supposed to be slowing down here as the marketing year ends here in, just a matter of 11, 12 days. So, that late season, counter seasonal demand like that we're seeing right now too is just maybe something that's just keeping a little bit of support in the front end of this corn market before we start really rolling into some harvest here in the next handful of weeks. Just starting to hear that producers are starting to roll in the south, and it's going to start working its way slowly more northerly in terms of seeing those new bushels into the pipeline. Tomorrow for both these, for beans and corn, we seem to have that $9.75 number for November beans, that $4 number for corn. We got back there, and it just kind of at least put a hold on things today in terms of buying strength. Like I said, those are going to be some psychological barriers that we just need to push past. So we'll see how the rest of the week goes. Obviously, we'll get a little bit more crop information today, even though ratings are kind of getting to the point they don't really matter. Weather is kind of not a factor anymore at this time frame unless it gets extreme. So we'll see how the next few days goes here in terms of this. Do we get some follow through off today?
How about that wheat market trade? That was maybe the weak spot of Monday's action, spring wheat in particular. And I know there's a lot of talk of a big spring wheat crop in the northern plains. Will some heat the next 10 days and continued rain in some of those areas have an impact? We'll see. But wheat's been curious to me. So trading a lot of news overseas, I feel like here as of late. What's your perception of the wheat market right now, John?
Yeah, I agree with you there. That was one thing, at least going quickly touching on corn. It acted independently from wheat a little bit today as, we just struggled to find some value. The biggest thing is, it's still, we got to keep in mind in the wheat market is still global prices. I mean, right now that, yes, you look at the exporters supply of wheat, it just seems, it's tight compared to the last handful of years. But the question is, does that get to our shores and give us some additional business? And we're still pretty well overpriced. So that's the one wet blanket over a wheat rally here. But, did see a little more selling pressure in that spring wheat. Things we'll have to watch there. If they do continue to see some moisture, what happens to the quality? There's some talk already out there of some quality concerns in some of this harvested wheat. That could set in some bidding too. Also, for just the market is looking for good quality wheat overall. So right now with harvest right here at this time frame for both starting that spring wheat crop as well as that SRW crop, that make it a little bit difficult for this market to really find some traction in here. And as I said, it was a little bit nice to see corn act a little bit independently. Typically, with wheat started moving one way or another, corn moved with it. But at least today, corn just probably stayed tied to the soybean market a little bit more in terms of seeing some of that money flow.
We're joined by John Heinberg with Total Farm Marketing here today. I'll go to livestock, John, then we'll come back for some overall risk management thoughts here. Cattle trade was fairly mixed after the big down day Friday. Hogs got caught up in that. Hogs rallied on Monday, but cattle kind of struggled. I guess, what's your take of that big sell-off we saw on Friday, and then the lack of really any movement on the day Monday in cattle, John?
Friday was probably a product, number one, of a technical break. I was watching that 180 level in October very, very closely. We broke through there, and you just saw selling just kind of accelerate off that on that October live cattle contract. Did find at least a little bit of footing, got some bought back a little bit today. Cash trade obviously didn't help on Friday with things being softer and kind of continuing that downward trend. But maybe the retail market is what kind of got some footing. We had a solid close on Friday. Still holding 316, 317 carcasses. As we're getting close to or probably almost through the Labor Day demand window. Plus, on top of that, too, really strong week of export sales, market year high for beef last week. So that may have been enough to just maybe continue to put this market in a sideways fashion. But I do really think that retail demand side of it, the price of those carcasses, as well as the cash trend will be the main drivers here. So that'll be something we'll have to watch as cash continue to try to erode on that regard, and the retail demand now, if we get past this Labor Day buying window, starting to slip away as the quote unquote grilling season kind of comes to an end. Those will be downward factors that could just pull cash down, and that could, I think, keep a little bit of a lid on the futures, especially though we still got that big discount, cash to futures. I think the cash trend will be what dictates the futures trend here in the short order.
And we got an on-feed report coming up this Friday, I believe. So I think that's something to watch too. Traders positioning ahead of another on-feed report here, John.
Yeah, we'll see those numbers come out Friday. Again, the fundamentals in terms of cattle numbers and things of that nature, they're still going to stay supportive in this marketplace in the long haul. My concern is the money side of the equation. They've been long this market since the COVID low, realistically, had made good runs, made some good profits. Now the market seems to have kind of stalled out here over the last couple of months, and maybe it's a window where they just say, we're tired of the cattle market, and we see the money move out for a while. So that's something to be concerned. And we didn't touch on hogs. I know you mentioned it there in the intro question. Yeah, good day in that October hog. It's kind of a hard one to read right now because of where it's located. I don't like the direction of the cash market. Retail values have been softer over the last week. Really poor week of export sales there for pork last week as well. But we got that big discount. August came off at $90. October it was at 75. Trying to break out through the top side. We got the potential here for a bit of a technical break up in this market in terms of price. But that may stay be limited again as long as that trend in cash and that trend in the retails doesn't seem to have the footing it needs, that'll quickly put a wet blanket over top of a pork rally. So kind of watch maybe a move a little bit higher here as a spot that maybe build some defense unless we see those fundamentals kind of turn around in the next week or two.
Good stuff, John. As we kind of wrap it up here today, a condensed version of things, I guess, put some perspective on this for us, some risk management thoughts across the board here. Second half of the month of August, a decent day to start the week. What do you want folks to keep in mind and remember right now, John?
Obviously just stay active in the markets. One thing I've been talking with a lot of guys about in the grain side of things, if you're moving grain off the combine this fall, don't be late to the party. In other words, keep an eye on your basis level. Maybe you set some of those sales up now. You can always come back and re-own, because if we do have a bit of a quagmire in terms of old crop bushels, new crop bushels, the basis market, the cash market is going to reflect that. So that's something. Make sure you're just having those conversations with your elevator. If you decide to set a basis, make sure you put a put under it of some form. The volatility is cheap right now. Options to get through the next month or two as you're rolling the combine here are pretty doggone reasonable to at least give you some safety valve floor. This might be a spot we put in a bit of a end of summer low, but not a harvest type low yet. So that still has to be cautious when we really start getting some bushels in the pipeline. How does this market react? Obviously, we still got September basis contracts, got another 10 or 11 days to get those priced out. So those are things that could be headwinds over this market right now. So tomorrow's going to be the key. What's the follow through? But just take advantage of opportunities when you see them. If something looks friendly, make sure you're moving some bushels into it, because I still have a feeling there's going to be some pressure coming down the road as we start moving this big pile of corn into the pipeline. John,
if folks want to reach you at Total Farm Marketing, how can they get in touch with you?
Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And then don't forget the website of ours, totalfarmmarketing.com.
With that, John Heimberg, always good to talk with you. Thanks for being with us here today. Appreciate it.
Sounds good. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.